Alright guys, so I'm going to show you the two entry strategies that we have. They're the most effective in our eyes, in our opinion, because we always use them. So without any further ado, here they are. Alright, so the first one is really simple. When we are, let's just give you an example here. When we are going to go bullish here, all we're going to try and do here is really just wait for prices to reverse. So if we're going bullish, we see a change of character, just like this. You can see that prices is switching right now. One of the main criteria that we're looking for is not to be first in, but to be second in. Now, the reason why we're doing second in, not first in, is because a lot of times when there are change of characters that do happen, the market doesn't actually respect respect, let's just say, the demand zone in this case, right? And it'll, be a false entry, just like this, right? It'll run like that. And then, prices could potentially rise up from here, right? So one of the reasons, again, is we don't take first in is because we could be manipulated into, pretty much lose the entry that otherwise could have gone in our direction. So in this case, what we do is we wait for the second entry. That means we are looking for prices to show us that price can run bullish. And if it does respect this demand, if this chalk does actually work out, right, we look for prices to continue bullish, just like this. And then prices come back to react from that supply. Prices break that next supply. This also tells us that supply is weak here. The supply chain is weak. We have sellers coming in here. Then we have more sellers coming in here. That means when prices reverse, that means this is a weak supply, strong demand. That means we will be taking price, the next entry at this demand level here. And now this would be the second in, not first in. Okay, this already shows us and it proves us that the market is definitely weak, going bearish, but it has the potential to go rise even higher. So we would just enter here on this demand zone, just like this, and then target either the weak high or the supply zone, whichever presents itself first. So in this case, we could also do supply, just like this, as I mentioned, right? Typically, we'd want our win to reward ratio anywhere from 3% up to 5%, 5% being the best, obviously, 3% being average. So this is what you would do, right? Now, again, just to kind of iterate here, we did not enter on the first. We entered off the second demand zone here, just so that we can see the market is trying to prove itself, that it is trying to rise and is trying to run bullish here, right? Because we don't want to be in a trap here where we enter off of the chalk and then price goes against us, the opposite way, right? Taking us out. So we don't want more room for error. We want less room for error and more, more of an upside for us to have a stronger potential to win the entry, which would be the second entry in, just like this. So, all right, let me show you the second example. The second example is essentially like this. If price is going below, right, what we're looking for is prices to come back up, do this, and it's really essentially to sweep any form of liquidity. That means it could be a swing low, it could be a double bottom, it could be a triple bottom, it could be whatever. In this case, in this bullish example, we just we'd be looking for prices to sweep a low. That could be an inducement for the previous demand zone, like here, like so. Okay. And this to me signifies that prices want to run bullish, okay? Now, a lot of the times when I do enter off of this sweep over here, I typically don't look for breaks of structures. It's irrelevant to some extent because prices don't, a lot of people were trained to look at prices to break a previous high, an old high, for example, right, in order to make their distinction on entering. People are looking for more confirmation to see that price is trying to rise, but we do see a lot of times when price doesn't, give us a change of character or whatever, it doesn't break the previous high. And a lot of times, you see prices, stay well below the previous low and then just do something like this, right? They're accumulating orders, right? But once we have the low swept like this, all I am essentially just doing and waiting for is for prices to run back inside the sweep of liquidity. So once price has taken out this low and come right back into the liquidity sweep, I can just enter and catch the momentum like this because the sweep of liquidity has already been done. It's confirmed that we've taken out liquidity and now we're waiting for the internal low. We're waiting for the liquidity for the market to run bullish to essentially, respect its liquidity sweep, right? Once we sweep liquidity, we run the other way. So again, I would target the other given supply zone if it should be there, or the previous high like this, right? The old high, if there is also some form of liquidity sitting up there, right? Normally, I don't typically target the opposing liquidity because the market isn't 100% accurate all the time to target liquidity. I typically just target supply zones because that's where other traders are interested, into selling, and we never know the market's intention. So we want to add an extra layer of security, right? Because prices could run bearish again, and then could eventually come and take out liquidity to then run bearish, right? So again, this is the second entry criteria. We just wait for the sweep of the low, a sweep of any form of liquidity. Honestly, it could be even double bottoms, triple bottoms. Relative lows in this sense. Let me just kind of delete this here and show you another example. Some various liquidity examples. We could also see prices do this, just like that. That's your double bottoms, right? Just like that. You sweep those, something like that, right? We could also see a relative low, just like this as well, right? Which means price is ascending. It is going bullish. And then eventually we get prices to come back down, right? And then to run up, okay? But the whole idea here isn't to see the price break the high or a change of character, because a lot of times that could also be irrelevant, right? The whole point of this accumulation phase in here is to accumulate orders before price breaks, because the market is just about to explode and it's not going to give anybody a fair chance to get in once this break of structure comes into play, right, for people to get in. Right? The markets weren't invented to create confirmations for you to get in, but they're invented for one specific purpose, is to take everybody out while they take, yours and mine money, essentially, right? But all right, so let's go and show you guys in the live chart example. I'm going to kind of be fairly quick about this, and hopefully it's very simple. Let's look at this, for example. So what I'm looking at here, we're on the daily. We start on the daily. We want to make sure that we capture the momentum. The weight on the daily is huge. That's where all the all the banks, financial institutions are. I encourage you start on the daily. Anything above the daily is a plus, obviously, to understand the momentum, who has swept who, right, and understanding to trade in that intention of the market's intention in that direction. Right. So in this case, since we're intraday trading, you don't necessarily need to go, zoom out all the way in the back, but you can. It's a good practice. In this case, I could tell you right now that we had all this liquidity swept right here. So this to me tells me that we are actually bearish, not bullish. Okay. The daily is not bullish. It's actually bearish. We just swept all this liquidity. Therefore, we see that the first supply chain was actually broken right there. Prices, the intention of price is to go bearish. We do see liquidity here. We also do see that we are at the swing low, swing high areas like this, right? We do see that we're coming into a discounted area. That means, the lower the price, right, the worse price can perform. It will perform, right? You want to catch it at the premium area. But in this case, since I know this is liquidity and my intention is to go bearish, this is my main target, or at least an area where I expect for price to come in sweep, then to reverse back up, right? That's all I ever want, right? So let's just wait for this low to be swept. It's a good practice to see the daily swept. All right, we see the daily sweep, right? And then I'm going to run down the 15-minute. My main intention here, let me turn off this actually because this is actually irrelevant at this point, and I'll bring it up when I'm ready. My main point and focus here is to wait for a 15-minute low or 15-minute high to be swept. In this case, a 15-minute low. The only reason why is because we want to make sure that liquidity is swept. This is one of our entry criteria, right? Again, liquidity sweeps. So let's just wait for, let me see what time this was. This is 23. That means that is end of Asia, but London's coming in. So maybe I could trade London. Actually, London is right there. London is 12 o'clock. So that means, let me actually even turn on the London session. Okay. Now, what I typically do here is I wait for the structure to essentially show me where liquidity is swept. Therefore, I can take the intended market direction, the intended correct session to go towards, the correct direction. Again, let me just rephrase this. What I mean by this is I don't turn on the sessions and look at where the sessions are about to open to enter. I wait for structure to do something, whether it's taking out liquidity first, right? Maybe mitigating supply zones, demand zones, if it's up to you guys, if that's what you like. We like liquidity swept, just like this. And this already tells me just enough on the 15-minute that we just swept liquidity. And then now I can partake into the next, into the session. That's when I turn on the session. And, if I can time the market and the sessions, the structure and the sessions, or the liquidity sweeps and the sessions together, that's a plus for me. That's where the money is, okay? So I can't go anywhere lower than this. Probably 10 minutes, I think, maybe 5 minutes. No, okay, so it's 10 minutes. So yeah, this right here would be an essential. I would not enter here. So I would still wait for the 15-minute to sweep. Then I would wait for the 1 minute to sweep as well. You can see right there, this would have been a 1 minute low sweep. There's your low, there's your high, there's your inducement right there. I would have also looked for, even way before that actually, I could already see that this is a low right there. If you guys can see that, we did sweep this low right here. This could have been an entry as well on the 1 minute, not on this time frame obviously. And you could target the next given supply zone, right? That would be this as your first target, okay? Another giveaway is that there is a bunch of receiving liquidity above here as well, right here. So we could also target that high right there. This could obviously be your first TP right here. Your second TP can be up there. Okay, it did reach out that high, so that would have been good, right? So again, this is one of the criteria, the liquidity sweep entry criteria, right? You would enter from the sweep. You could also, and I also did see this as well when we were here, this could also be your other entry criteria, okay? These are the sweeps, okay? This is why price is so nice and it runs so fast into these, into the given opposing liquidity or into the supply zones in this case as well. It just runs so fast, okay? So there you go. Those are two examples, right? Obviously right here, you can see when I mentioned there's liquidity there. Look what happened. This is the news, right? This is NFP news, I'm pretty sure, or some sort of type of news on Friday. So it is NFP. You can see price just took out all that liquidity and it ran bearish, right? It didn't, right? So it didn't have time to think to even run up. But is this the end of my direction, my trading? No, I still want to be looking for buys. We just had all this entire liquidity swept. So now my main objective is to look for buys here. I'd be on the lower time frame. I'd see New York. Here's my next entry right here. Actually, hold on a second. I think I see it right there. Yeah, we saw this liquidity area here. On New York, I would wait for New York to open, right? I saw liquidity swept there. Let's go on the 10-minute. I would like this to be on the 1 minute, obviously, but if I did enter here on the 1 minute, I would only target the opposing supply zone here, right there. So this would be the first TP right there, right? Now I'd still want the 15-minute to switch. Right now we haven't had it switched. Let's go on the 15-minute again, okay? And the way this really works is really the 15-minute needs to switch, not necessarily the 1 minute, because we're capturing this all for the daily. So as you can see right here, we only have a high and a low, high and a low. Nothing's really creating. We might have to skip off of this session until the next day. Okay, the trick here is to be patient. We're only looking for structure that says the structure is shifting bullish. Right now, there's nothing. This could be something here, actually. Let's look at that. This isn't my preferred. It's not the best. Hold on, excuse me. I'm just going to do this. Okay, this already took without us. It's totally fine. Let's wait for the next session, right? Again, this isn't to try and get in every single day. It's essentially trying to be patient, waiting for the 15-minute to switch, to sweep liquidity and to run. Okay, so we have, this is liquidity. We also see that this is a supply zone people are trying to trade from. This is a bunch of liquidity, although let's wait I'm going to wait for confirmation here now to see if prices run bullish here. If they do, I'll take this entry. If not, I'm not taking it. You can see prices, demand went up, it failed, supply took over. Let's look for prices to switch. Nothing switched. Okay, so therefore there's no entry opportunities here. Okay, and New York is coming up now. Okay, so what do we do here in this case? Well, we still wait for we're going to mark out this liquidity area because there's so much liquidity here. All right, we're going to see if price actually even sweeps. It has not, and that's okay. We're still waiting for prices to sweep something, right? This isn't to be right every single time. It's to be right, only the time when structure tells you, not when the sessions tell you it's time to trade, okay? Because a lot of people are here trying to get in now, right? We're waiting for structure to shift and tell us when it sweeps. Let's see. Let's wait for London now. Okay, there was actually a sweep. I was a bit late for that, but there was a sweep. We see the 20th. This is Asia, so Asia swept. London is about to come open. Let's see if we have any entries for London. I haven't showed you guys the supply and demand entry yet. This one would be it right here, actually. Right there. This would be an entry for supply and demand, not sweeps of liquidity. Even though it does sweep liquidity, like right there, as you can see. Let me just zoom in right here. You can see that the liquidity was swept, but we identified the demand zone right there, and that's because we just swept this area right there. Let's see if this works. Obviously, we'll be on the 1 minute to target this. It's very there's not a lot of momentum here, obviously, but based off oh, there we go. That's much better. Based on this London sweep right here, excuse me, not London. Based off of this 15-minute low sweep on Asia, this already convinced me enough to say I'm buying here, and this is exactly that supply and demand, entry that I was telling you about. There's no actual liquidity other than the internal little liquidity that you see here. But since I'm treating this 10 minutes as my entry time frame, that is my entry. So I would have done this and then looked to see this as a reaction point, pretty much just to get in. Again, if prices did, when they broke here, I would have waited for price to come back in. This would be my next entry to take price long, because we do see this is the last reaction. This is the last supply area that price had reacted to right here, right? So unfortunately, we had a imbalance move, which is a good sign for us, obviously, had you entered right below here. Now, mind you, like I said, we're looking only for buys, not for sells. And we entered here off of supply demand. The other one was based off of sweeps, right? If we correlated this move here, this entry here, this would have been an entry here had it been the London. But since we don't trade Asia, we wait for Asia to complete its, session, London to come in. We just enter because the previous liquidity was swept by Asia. Now we're continuing this entry of the session with the London impulse, essentially, right? Looks like there was news over there. Let's do one more. hope you guys start to see the rhythm of how this works, right? Here we go. We have sweeps of liquidity here. This would be the New York sweep. And then we could literally just pull in on entry on here, right? Once it sweeps, we see some momentum on the bullish perspective, on the bullish side like this. You could either enter on this time frame or go on the 1 minute, obviously. But since we're on this time frame, we'll just stay here. That's the end of New York, so you would have been obviously stuck here if you entered here to hold price far. Two things we can go about this. Since we know price went up here and then started running down, you could go on the 1 minute and start targeting your nearest supply zone in this case, right there, right? It would be nice to have price run up here, but let's actually be realistic here. Since the session is almost over, you know, I'd rather get in on an entry and then be done with, you know, with the trade. Let's say you didn't want to take this entry though, right? Let's say you didn't want to take this because this is a sweep of liquidity. We could go in and work around what we're saying here. We see a bunch of imbalance, see prices running up. There's no other supply zones other than this supply zone here. So what we would do in this case is depend off the sweep. And if we have a sweep of liquidity, let me see. We don't have it here, so it's playing off supply and demand. Something I can't see in this candle, obviously, but I do see a sweep here. So I would have been in here, right? Now that's the internal entry between this low and this high. So we could take this, right, and tap this supply zone. So this would be a safer area to enter. So this would be off of, literally off of the sweep. Because there's no structure to work around with, right? And the session ends here off of this supply zone, sell to buy, right? All right. I hope you guys understood what I was meaning, what I was talking about here, how, you know, we have effective, you know, these are effective ways, the way we trade, the way we enter the markets. I hope you guys like this video. Please throw a thumbs up. If you have any questions, go ahead and subscribe and or comment on our channel on this specific video. Subscribe to us because we always give out free content. We love you guys. We'll see you in the next video.